Is there a bubble, and will it sift over into the commercial market? Joining us this morning is Ian Mackie, Asia-Pac CIO at LaSalle Investment Management. LaSalle is the investment manager of U.S. real estate firm Jones Lang LaSalle. Ian, morning to you. I know you've been on a trip, and you've been feeling the pulse around many parts of the region. You know, a lot of people talked about the U.S. context and whether the commercial mortgage securities market was going to be the next to fall. We haven't talked recently about the state of commercial affairs here in Asia. Any danger signs that are emanating? Ian, you with me? Ian Mackie.
Yep, you went quiet, sorry.
Okay. How is the state of commercial affairs in Asia today?
Well, broadly speaking, the fundamentals in commercial real estate across the Asian region are fairly good. We have most markets in supply and demand balance, big exceptions being Singapore, Beijing, to a lesser extent Shanghai, but most other markets are in pretty good shape, commercial. Is
it not true that vacancies are actually understated? There's been a lot of construction, and there's going to be topping out in the next year or two, and whether there's going to be enough demand to fill that commercial space seems to be still a very, very open question.
Well, all that supply is very well known in the industry, so I don't think things are understated. It's true that there's a lot of construction be topping out and finishing off, particularly in Singapore. And to a lesser extent in other markets, but there's actually fairly good underlying demand for that space in many of the markets, and even in Singapore we're starting to see some return of demand.
Hey Ian, it's Susan here in Hong Kong. Let me just ask you about your allocation across the Asia-Pac. You have $7 billion invested in the region, 63%, the majority of that money in Japan, and some would say Japan has been a laggard in the last few years. Are you thinking of maybe rotating out of this market?
No, Japan still, I think it's still the second largest economy in the world, and Tokyo's the largest office market in the world. There are very good opportunities in subsectors throughout Japan. We're a very large investor in the logistics real estate business in Japan, and in shopping centres and in office buildings, and indeed in three-star hotels. So no, I don't see us reweighting out of Japan.
Yeah, Ian, but Japan is also trying to battle deflation at this point. Its economy is in some real trouble, and the BOJ doesn't even know if it wants to exit stimulus at this point. There are some real concerns, wouldn't you say?
From a broader economic perspective, absolutely. But you know, I guess we're a niche player. We're not playing the highest end of the office market or you know, the stock market. We're very focused on real estate propositions where we can buy extremely well, add value, stabilize an asset, and then trade out.
What kind of criteria, Ian, do you use for leveraging the markets these days? Is there a certain ROE? You know, are you operating more on a yield basis? I'm just wondering, you know, as the parameters change, as economies bounce back, do you have to look at a different set of metrics to determine what is the highest and best use for your cash?
Well, 2-3 years ago, of course, the use of leverage for real estate transactions was far more heated, and everyone was able to secure a lot of leverage. That is absolutely not the case now, and so we are, and others, of course, are buying far more on existing yield and stabilised income, using a lot less leverage, and therefore taking a more conservative view on returns, on growth, and what have you. So we're looking far more to real estate fundamentals. We always look at real estate fundamentals, of course, but we're getting less assistance from leverage than in the past.
Ian, one quick last one for you. A very famous short seller a while back famously said that China and the whole market there, the whole commercial property market, as he views it, was Dubai times 1,000. Do you see parallels at all? Do you fear that, you know, leveraging is completely out of control and it's going to come back to bite us?
No. One of the big differences, I think, is that there's an enormous domestic demand for modern real estate, be it residential, office, retail. There is enormous latent demand and huge demand coming forward. I think there's many, many more years of sensible growth in China. People are talking about speculation and bubbles. Wherever there's speculation, you're always going to lead to a bubble. But behind the basic fundamentals in China are still extremely strong.
Okay, I think you've appeased a lot of people in the PRC there. Ian Mackie, CIO of LaSalle Investment Management. Sue.
There's always this